Welcome back to Stock Kong Invest and Analysis, where we look at the market and break down the opportunities.
Like and subscribe!
Robinhood, a buy-ahead Q4 earnings rating upgrade. This article was written by Kenio Fontes. Summary. Pause. Robinhood is upgraded to a buy as recent price declines create a compelling margin of safety. Despite short-term crypto-driven revenue volatility, Hood's diversification efforts, subscriptions, net interest, and innovative products are showing strong growth. Operational leverage is evident. Top line is up 100% plus year over year, while expenses rose just 35%, supporting sustainable, long-term profitability. Assuming continued execution and reduced crypto dependency, Hood offers approximately 12.5% annualized return potential with a 60% upside by 2029. Robinhood HOOD was a stock where one of the only things missing to make it a buy was the price. The story is very good. The company already performs very well and delivers excellent fundamentals. The prospects are interesting. But in my last article, the stock was still priced for perfection. Check it here. The Q4 earnings release is coming up next week, so I revisited the case. And since then, the stock has fallen about 30%, largely related to short-term news, such as the drop in Bitcoin, BTC USD. For me as a long-term investor, this generally has little effect on my assumptions. In my forecasts, I still see solid growth for the platform, and with the recent decline, the margin of safety has become much more attractive, allowing for an upgrade to a buy rating. Why HOOD stock fell? The main recent news that caused HOOD stock to fall sharply was related to Bitcoin. If you follow the crypto market, you know that there has been a widespread decline in recent days. Not long ago, Bitcoin was at almost 100K, and now it is close to 74K. It is a really big drop, and it affects the short-term outlook for Robinhood. It is not only an euphoria like, Bitcoin is falling, Robinhood must be doing badly. Remember, a huge part of Hood's revenue is linked to crypto/BTC. With financials volume down, the top line will shrink, naturally. But the crypto market is very much driven by cycles and emotion, and if sentiment towards Bitcoin begins to fall, traders should decrease the frequency of trading and the volume of transactions. The equity and options market and even others, which includes items such as prediction markets, are much more stable. Some people may invest every month, and even though there are positive and negative cycles in stocks, it is much smoother than crypto. Crypto's transaction-based revenue was approximately $61 million in Q3 2024, and starting in Q4, that revenue multiplied by more than 4 times, because it was a very bullish time when Bitcoin showed very high returns and surpassed milestones such as 100K for the first time. In my view, this is the main concern for Hood stock, especially in the medium term. It is impossible to know whether this decline in Bitcoin will last a few quarters or until 2030. This would be incredibly bad for our assumptions in the valuation section. Also, we should see a lot of execution risks in the next few years. New features such as the prediction market are not easy to continue growing, especially if we remember the number of new platforms that are strong in this segment: Polymarket, Kalshi, and so on. Same thing for crypto. Now, several digital banks already offer the option of buying crypto, New Holdings, Mercado Pago, and this could lead to a fee reduction, more investments to retain customer, and so on. I still believe in the Hood's future. Well, the good news is that Robinhood has been working on this diversification for some time, and we are already seeing some results. For instance, in slightly older quarters, revenue from other was much lower, varying around $10 million, and now Hood has reached the $72 million mark and is growing 200% year over year, so this will eventually help balance the high revenue from crypto and options. Also, credit cards are proving to be a successful initiative, having grown more than 300% year over year. Same for gold subscription that reached $47 million in the last quarter, also growing 70% year over year. Now, if you consider that all these initiatives are still very embryonic, the execution is very good, and Robinhood already has a very large user base to monetize. With increased penetration in the base, In a few years, we should see these revenues become much more significant and reach something close to what crypto is today. It may seem like a long way off, but crypto revenue achieved $268 million in Q3 to approximately $50 million in subscriptions. But if that continues to grow at 50%, it will only take 3 years for subscription revenue to reach $170 million, more than half of crypto, and we're talking about just one line of revenue. This is not just something that happened by chance. It was a major effort by management, so much so that it is highlighted in the presentation. In 2019, options trading alone generated approximately $100 million in revenue. Now there are 11 revenue streams, which include not only common trading services, but also more innovative features such as prediction markets, which is not an easy product to scale and integrate into the platform. But Robinhood has proven that it can offer highly diversified services and make them profitable. Another point that convinces me about the case is expenses. While the top line is growing at plus 100% year over year, expenses grew by 35%. It is worth remembering that the company is still in the process of building many new features and investing in R&D in order to truly mature these new sources of revenue. And yet it is already showing absurd operational leverage. For instance, look at their website and see how many tabs have been added over time. It's no longer just crypto or trading. Now there's retirement, cards, social, predict, and several others. Therefore, it seems to me that even with the uncertainties related to competition, regulation, the crypto cycle, and the like, Robinhood is capable of delivering on the assumptions I mentioned in other articles, gradually growing funded customers to reach 37 million in 2030, and going from approximately $190 RPU to $250 in 2030. And just by maintaining a net margin of 45%, we already have a PE of 18.9x for 2030. And it is worth remembering that the average for the last 5 years is a forward PE of 37x. If we assume that the fair PE will be somewhere around 30x by the end of 2029, we would already have an upside of approximately 60%. This gives a total return of approximately 12.5% per year. This upside implies a price target of approximately $120, and this is even more feasible because HOOD stock has already been at levels even higher than that. Obviously, for the company to actually deliver this, it will have to prove that it can truly diversify and reduce its dependence on crypto. And it will also need help in 2030 to have a healthy or bullish cycle of equities and/or crypto, so that it can actually achieve an ARPU of $250. But in any case, it seems to be quite feasible, and if it continues to perform as it is, Robinhood will eventually be able to deliver in the long term. For this reason, it is something worth keeping an eye on during the Q4 earnings release. The company should comment on the crypto cycle and how it is affecting revenues in the short term, but it should also mention how its strategies are going and balancing this, whether they are strategies to keep traders engaged or the maturation of initiatives for more stable revenues, such as subscriptions. In my view, this matters much more to shareholders than any negative guidance that falls below market expectations, which is something that could happen given the downturn in the crypto cycle. The bottom line? Robinhood is not a perfect case. The company still needs to find a good path to follow until its financials are even more sustainable and shareholder value can truly be unlocked in a substantial way. But in any case, recent uncertainties related to Bitcoin have opened up an interesting margin of safety in the valuation, allowing me to upgrade HOOD stock to a buy rating.
Hey viewers, like and subscribe to our channel. We'll keep bringing you more insightful stock analysis. It's going to be wild.